Hi, dear friends, how are you doing? So, I have a little bit of a cough and cold, so please forgive my voice. I think voice also has changed a little. Okay, guys. So, in the previous session, we were discussing, if you know the BCCI session I had put up, where we have discussed, uh, advancement of general public utility means what and all those things. So, nothing much there to do. I hope you watched that video and understood the real meaning of the same. So only in that 2 clause 15 in the advancement of general public utility, they have told that business things you cannot do. More on that in a while we'll do. Let's come to anonymous donations, guys. Page number. Other parts we'll quickly finish it. We'll finish anonymous donations and see other things. Here. R12. Anonymous donations. R12. So in these anonymous donations, guys, section 11 and 12 are not available. This is under section 115 BBC. This was inserted by P. Chidambaram. So generally, all these trusts who run school, colleges, hospitals, they were using the concept of trust as a front to convert black money to white money. So they used to keep a donation box, or in these big large religious these charitable institutions, you have this donation box. In that donation box they used to keep, and in the night they only used to put money, black money. So in the morning 2 crore, 3 crore, 4 crore, like that. So many such companies, many such trusts used to convert black money to white money. As I told you, many international schools in and around Bangalore are all owned by large builders, because they can easily use it as a front to convert black money into white money. I'm feeling a little sick, guys, so that's why please don't mind. There'll be no difference in the quality, don't worry, but then voice is a little annoying for me only, and even I have a very bad headache, but don't worry, okay? So this is what they were doing. Anonymous donations they were putting in, right? So P. Chidambaram decided to change this law, whereby he said, if there are any anonymous donations, for them 11 and 12 will not apply. 11 and 12 will not apply. And 30% for the remaining, this whatever income that you receive anonymously, how much percentage? 30% will be the tax. Now, when this happened, major consequence was all these Tirupati Balaji temple and all these temples, came to Chidambaram and said, bro, we are also a charitable organization. Obviously, in that hundi, it's called a hundi. Hundi is also in Hindi, it's different, but generally in Kannada, they call it hundi. In that hundi, in that, donation box, we all put 10 rupees, 15 rupees, like that, 100,000. Once, I think, Amitabh Bachchan was sick or something, and he went to Siddhivinayak temple in Mumbai, and he put a donation of 1 crore. Imagine, they saw him put 1 crore cash. So, whatever the case may be, they are also, if you are taxing 30%, then they did not like the, religious trust did not like this concept. Then Chidambaram said, sir, sorry, I did not mean to say all trust. Let me give a more better clarity. Then he amended, certain amendments are made in this section, whereby this will not apply to a purely religious trust. So if you are a trust which is purely into religion, then this section will not apply. It will be considered as a normal donation. This is an abnormal donation. Anonymous abnormal donation. Sir, what if I am a religious trust and a charitable trust, which means I have school also, and I have religion, spirituality, etc. For example, Isha Foundation. Isha Foundation not only has, obviously, the trust not only works towards spirituality and religion, more spirituality than religion, to be honest. And second part, they also have school, Isha Shala, they have, whereby, you can get trained in the other life skills rather than these normal things. So that is called as the Isha Shala. So if you see anonymous donation, means, so in those cases, what will happen? Those cases, what will happen? So there they say, if the donation is specifically towards you know, what do you say, corpus of temple, etc., then you should specify clearly. If it is for corpus of the temple and other things, then it is not taxable. Otherwise, it will be deemed to be anonymous donation. That's what. And what do you mean by this anonymous donation? So what do you mean by this entire thing? Donations, voluntary donations. We will see that. Basically, voluntary where I don't want my name to come. It mostly applies to schools and colleges. So, as I told you earlier, it was just 30% of anonymous donations. Later, they said this will not apply to religious trusts only. But some of the cases were really genuine. So, even if some schools, etc., were taking money, they were genuinely taking for the betterment of education there. So, that's why after all these adjustments, they also said up to 5% of the donations, or if it is up to 1 lakh rupees of the total donations, up to that amount, I will allow. Up to that amount, I will allow. Which means if it is up to 5% of the total donations or 1 lakh rupees, no problem. Only thing more than 5 lakh, 5% only is a problem. So check it out. Anonymous donation means any voluntary contribution where a person receiving such donation does not maintain a record of the identity. That is, name or address of the person making such a contribution and such other particulars as may be prescribed. Where the total income of the trust includes any income by way of any anonymous donations. Where total income of the trust includes any income by anonymous donation, income tax will be how much, guys? Amount of income tax calculated at the rate of 30% on the anonymous donations received in excess of the higher of the following amounts. 5% of the total donation. Total donation means what? Anonymous donation plus anything in the corpus donation plus all general donations. Overall put together, you should take 5% out. Overall put together, you should take 5% out and 1 lakh rupees. Higher of the two. We'll see example, you'll understand. Amount of income tax with which SC would have been chargeable, normal slab rates, had this total income been reduced by the amount referred to in. So, for that rates on top 30%, for remaining it is normal. For remaining it is normal. So, for example, if anonymous donation is 15 lakh, other donation is 5 lakh. Overall, we have 20 lakh. What is 5% of anonymous donations? 75,000. 75k or 1 lakh, whichever is what higher. So up to 1 lakh, I will not 1 lakh. I will not consider only as anonymous. What is the remaining portion? 14 lakh. So on 14 lakh, guys, 30% rate will be chargeable. And the remaining amount, how much? 5 lakh plus 1 lakh. Here 1 lakh will come, no? 5 lakh plus 1 lakh. For 5 lakh plus 1 lakh, what is the provision? Normal tax rates. Normal tax rates. Very, very simple. So if it is just a school, then black money is routed, so it is treated as anonymous. If a trust owns both temple and a school, if a separate donation box is kept and whatever is there for the school will be taken as anonymous, but whatever is there for the temple, it will not be taken as anonymous, as I already told you. Now, ICAI has one view with respect to application of income, which we'll see, no problem. If you see wholly religious trust, anonymous donation received by wholly religious trust shall not be taxed under 115 BC. Anonymous donation received by a trust owning a temple, wholly religious and charitable trust. Anonymous donation shall not be taxable under 115 BBC unless the donation is made with a specific direction. That such donation is for any university, education institution, hospital or medical institution run by such trust or institution. So only it is generally not taxable if specifically if it is given for that what do you say, university education institution, only then it will be taxable. Wholly charitable, of course, anonymous donation will be taxed under 115 BBC. Anonymous donations that are taxable under 115 BBC shall not be entitled to any exemption under 11 and 12, obviously. And anonymous donations are not taxable under 115 BBC shall be taxable under normal provisions, of course. So anything related to a temple will not go under 30%, it will go under normal slab rates. Normal slab rates, extremely easy. So, for example, two cases will take. Anonymous donation 6 lakh, 2.5 lakh. Other donation 1, will name it as Roman number 1. 3 lakh, 60 lakh. So what is the total donation? 9 lakh, 62.5 lakh. Fair enough. Other income from property held under trust. Well, limit to 10 lakhs, 40 lakhs. Application of income. Application of income including 15%. This is an assumption. 5 lakh, 29.5 lakh. Means how it's calculated, I'll just show you. Here down I'll write. How is this 5 lakh calculated? Just an example. Here I'll write. Mind you guys, let's write here. It's an assumption. Means how? Overall is 10 lakh other income. Plus this is how much? 3 lakh. Because that is how it is charged, no? 3 lakh. Overall is how much? 13 lakh. In 13 lakh, 15% set aside. That is 1,91,000. Then others. Other, that is 85% remaining. In that which is applied. 3,05,000 is applied, you assume. That's why overall put together is assumed to be 5 lakh. This is applied. After removing 50%, remaining some 11 lakh odd should have been applied. But in that, how much has been applied? 3,05,000. So here I am showing everything applied is how much? This much. Now let's see how to tax. How to tax. This application I will make it as 3. So what would be the taxable income? First of all, anonymous donation, fully taxable. How much, guys? 6 lakh. But in that 1 lakh benefit is there, that we'll see. Then others. Others will be what, guys? See this. First is this one, other donation, plus this one, other income, minus application. 15% ad hoc, no tax. After that, remaining 85%, in that, in my example only, 3,01,000 was, applied. So overall, full 5 lakh, there will be no tax. Only in the remaining part, there will be tax. Very, very simple. So for others, it will be 1 plus 2 minus 3. That is 3 lakh plus 10 lakh, 13 lakh minus 5 lakh, 8 lakh. Overall 14 lakh. So basically, guys, 5% of total donation, 5% of 14 lakh. 5% of 14 lakh is how much? 1 lakh 40 by 2. some 70,000. 70,000 or 1 lakh, whichever is higher. Which is higher? 1 lakh. So anonymous donation which is taxable, 6 lakh minus 1 lakh, 5 lakh. Other income. So guys, other income actually is how much guys? 8 lakh. Other income actually is 8 lakh. But if you remember here, in this only 5 lakh is being taxed at 30%. What happens to that 1 lakh? That also has to be taxed under normal rates. Yes or no? Yes. So other income here, 1 plus 2 minus 3. Other income of 8 lakh I will take, plus is 1 lakh, which was an exemption given for anonymous donation. That also has to be taxed. Ideally speaking, here I have already subtracted 15%. See here, I have already subtracted that 15%. That's why after adding those only 5 lakh is coming. So in that 5 lakh, 5 plus 3, I have already subtracted. In 8 lakh, I have already subtracted 15%. But in this 1 lakh also, will 15% benefit be given? Ideally, it should not be given, but ICAI says it has to be given. So guys, let's follow ICAI. ICAI says here you have already deducted 15%, but on this 15% is not deducted. So minus 15% of 1 lakh. 9 lakh minus 15,000. So 8 lakh 85,000. On this 8 lakh 85,000, normal rates. Normal rates. This is how we need to compute. See the next one. What will be the anonymous donation? 2.5. Overall 62.5 lakh. Yeah. What is the anonymous taxable income? Anonymous donation is 2.5 lakh. Others is 1 plus 2 minus 3. 60 plus 40. 1 crore. 1 crore minus 29.5. 1 crore minus 29.5. 70.5 lakhs. Overall 73 lakhs. Now you see 5% of 73 lakh or 1 lakh, whichever is higher. What is 5% of 73 lakh? 7.3 divided by 3 lakh. How much? 3 lakh 12,500. Correct. Total donation you have to take. Sorry guys, not 73 lakh. This is taxable income. I should see this one, no? Obviously. Sorry, my bad. I should see this one. This is the total donation. I should only see donation. Other income I should not compute. Previously also my bad. I'm sorry. I told 5% of this one. Wrong. It should be 5% of total donations. Excuse me. Sorry. Here guys, it is 5% of total donation or 1 lakh, whichever is higher. What is total donation? Don't see total income. My bad. See this now. 9 lakh. Total donation is what? Anonymous donation plus corpus donation plus other things. What is 5% of 9 lakh? 45,000. 5% of 9 lakh is 45,000. Similarly, now I should see 5% of how much? 62 lakh 50,000. 62 lakh 50,000. Right? I hope you understood. My bad. Sorry. I did 5% of this. My bad. Because 5% of total donations they are asking. They are not asking 5% of taxable income. But 5% of taxable income, then 14 lakh is correct. My bad, guys. Sorry. I missed it out. In that flow, I is taking 5. So like this mistakes, if we do now, we'll lose marks. So don't make mistakes like I did now. Deadly it will be. Okay. So 5% of total donation. What is total donations? 9 lakh. Then 5% of how much? 62 lakh 50,000. How much will it be? 3 lakh 12,500. 3 lakh 12,500 or 1 lakh, whichever is higher. 3 lakh 12,500. right? What is the anonymous donation taxable? Up to 3,12,500 it's exempt. What is anonymous donation? 2,50,000 anyway. So it is nil. That is nil. Now tell me, other income. Other income will have, after all the adjustments, 70,50,000. It will have. Plus what I should do? Up to 3,12,500 anyway it's exempt. That's why I should add this back. Correct? So it will be same. 70,50,000 plus 2,50,000, because this will be treated as normal donation, because anonymous donation is anyway exempt. Normal donation. But for this, I've already taken 15% benefit. For this, I should give 15% benefit. So minus 15% of 2,50,000. 72,50,000 minus 15% of 2,50,000. 72,62,500. So here, normal rates. This will go at normal rates. This will be taxed at normal rates. Very, very simple. So I hope you were able to understand this concept, guys, right? So normal rates will be this. One thing is, for that 1 lakh also, important, ICAI gives 15% benefit to either 1 lakh or 5% of total donations, whichever is higher. So you give this benefit, and then for the remaining amount, charge for remaining amount. Charge normal rates. Charge normal rates. So if you open the MCQ vault and the Q&A vault, you will find many questions. Every time 6 to 8 marks they are asking. You can go through that. If you have any doubts, you can ask me. It will be similar to this only. It will be easy, but please solve it, guys. Please solve it. Right? We cannot sit and solve everything. That's why I solved you this adjustment. This is an examination adjustment only. But full-fledged problems, you solve it. Okay. Later, if you have the time, this part we will do it again. But now you please solve that on your own. Okay. Any doubts, you can ask me. Please sit and solve. Only then the clarity will be there. That's about it, guys. So see here, denial of exemption under 11 and 12, that is 13 subsection 1, page R10. When will the exemption be denied? Section 13 1A. Income from property held under a trust for private religious purposes. Entire income from such property does not ensure any benefit to the public. So guys, ultimately you should benefit the public, right? It's a private religious purpose. So only one family has a trust, and only for their religious activities they do it. Many such things are there in Karnataka and Tamil Nadu, where big families, rich families have their own trusts to do some puja and all they'll be doing every day. Correct? So that's what it is. There is this hospital called Ramaya Hospital. Ramaya was one of the leading luminaries before in the entire medical profession. Once he passed away, then there are many other deaths in the family. So there was a, saying that some bad omen is there against your family. You should never stop any construction activity. Construction activity should be going on 365 days a year. So I'm not joking, guys. You can check with anybody also. Ramaya always in that hospital area, in and around, they'll always be constructing something. Sir, everything is constructed. They'll demolish something. They'll always be, doing it. So like that, they have a trust to manage all this. Like that, if you have a trust, and they're also into all this, they'll be appeasing all the gods. So if you have a trust where all the important pujas, etc. are going on happening, it's a private trust, only private religious purposes for your family. Then what exemption you will claim? This is obviously for the greater good. Income for the benefit of a particular religious community or caste. Yes, so if you have separate trust for only Brahmins, separate trust only for Gaudas, separate trust for only Vokkaligas, these are all, subsets or, subsects in Karnataka. So like that, separate trust if you have for caste, subcaste, etc. Obviously, it will not be there. However, what if I have a separate trust for scheduled caste, scheduled tribe, other backward classes, OBC, etc., for tribals, etc.? Yes. So there is a tribe called Soliga in Karnataka. So Soliga tribe, I mean, there are many benefits given to them. There is a separate trust for the betterment of the Soliga tribe. So of course, if you see, remember in 10th standard we had a what do you say, chapter on the Soliga tribe. So I always had that practical bent of mind. So I asked my dad to take me to the Soliga tribe. So I went there and observed all those things. Then in fact I came back to my school and I took all my friends also. The entire teachers also had come. It was very nice to understand the practical aspects of the Soliga community. Right? So if you see, it just struck me now when I was talking about this. So if you see, a trust or institution created for the benefit of backward classes, scheduled caste or tribes, women and children shall not be covered under this section, which means for them exemption will be granted. But if it's only for a particular religious or charitable trust for a particular religious community, then of course exemption will be not eligible. Similarly, income for the benefit of specified persons only. I have opened this, we had seen in clubbing, if you remember guys. I opened a trust only for my daughter or my son. That will be eventually clubbed, if you remember, in clubbing. But yeah, obviously, can you claim, sir, I am opening this trust only for my education? In one of my schools that I was in Mysore, there was one girl, Bhavani was her name. Many years ago, she was my super senior. So when she was crossing the road coming into school, she was run over by a lorry. And of course, she lost her life. It was spot death. So her father every year used to give around 2,000 rupees, 1,000, whatever it is, award. It's a Bhavani Scholarship Award for any person who scores whatever well. Basically, there was an award in her name. He had created a trust. There was money being pulled in and they created a trust for there. In her name, this was always happening. So if you see, if like that for the benefit of specified person or in the memory of somebody, or let's say they opened a trust in benefit of a person who was, handicapped, or a rich person opened a trust for the pure benefit of his, ailing mother, whatever the case may be, guys, then any income of religious or charitable trust ensures directly or indirectly for the benefit of any person or any property of the trust is applied directly or indirectly for the benefit of any person. Such income shall not be eligible for exemption. Similarly, these funds also, any fund should always be invested in 11.5, as I told you. Can I use that money to buy shares of Infosys? No. Entire income shall always be, used only for 11 subsection 5. Entire such income of religious or charitable trust shall not be eligible for exemption under section 10 or 11. The income referred to in clause A to D of section 13.1, which is not exempt under 11 and 12. A to D, this entire thing, guys, deadly. If you play around there, maximum marginal rate 42.744%. Now, who are these specified persons? Specified persons. Check. This is the meaning of specified person. Yeah. So, who are specified persons, my dear friends? Let's see. Specified person means these people, author or founder of the institution. So, generally, the trust, the main trustee, the person who creates the trust is generally called as the author of the trust, not author of some book and all. It is author of a trust. Author or founder of the institution. Any person who has made a total contribution of an amount exceeding 50,000, substantial contributor up to the end of the relevant previous year. So, any person who has given contribution of 50,000 and up is a specified person. Where such author or founder or substantial contributor is an HUF, then member of such HUF also. Any trustee or manager of the trust or institution, any relative of such author, founder, substantial contributor, member, trustee, manager. So basically author, founder, then anybody who has given substantial contribution of 50,000 or more, then if it's a HUF, then member of the Hindu undivided family. Then trustee, manager of the trust or institution. Then of course relative of such author, founder, substantial contributor, member, trustee, manager, and all these things. And any other concern in which any of these people have substantial interest. Substantial interest remains the same. That 20% thing, same. We have already seen it before. That remains the same. And relative, already discussed, guys, same. Individual, spouse, lineal ascendant, descendant, and their respective spouses, brother, sister, lineal ascendant, descendant, spouse, brother, individual, brother, sister, their lineal ascendant, descendant, lineal ascendant or descendant plus their spouse for the individual, parents, and all these things, same. Spouse, brother, sister of the spouse, lineal ascendant of the individual, lineal ascendant or descendant of the spouse. So basically your father-in-law, mother-in-law, your parents-in-law's parents, your parents-in-law's grandparents, everything is covered. And not only that, lineal ascendant of a brother or sister of the individual or spouse of the individual. So your sister-in-law's lineal ascendant descendant, your brother-in-law's lineal ascendant descendant. So basically, it is more harsh than other sections that we have seen. Everybody is covered. No need to remember all these things, guys. They'll not give tricky questions saying that your mother-in-law has come, sister-in-law, nothing like that they'll ask. But, go through that these are the areas that are there. 13.2 specifies a few instances where income or property of the trust is to be deemed to be have used for the benefit of the person. For example, if I give a loan without adequate interest or adequate security. So basically, the trust gives to one of the relatives of the author for 1 lakh rupees loan they'll give at instead of 18% interest, they will give 16% interest. That's without adequate interest or adequate security. So they have given a 1 crore rupee loan, but they have taken a 20 lakh ka security, all those things. Allowing use of property without adequate rent, of course. So where they're, using the property, rent is not being paid, those things. Excess payment for services. He is a chartered accountant. He generally charges 20,000, 30,000, 40,000 for an opinion. This company has paid him 20 lakhs for an opinion. Weird. Inadequate remuneration for services rendered. Inadequate remuneration for services rendered. Inadequate consideration of property sold, diversion of income exceeding 1,000 rupees, all these things, guys. Investment in substantial interest concerns. Yes. 13.4 also provided some respite where aggregate funds invested in the said concern does not exceed 5%. So up to 5% you can invest. So income, basically, if you have invested in a concern in which any of these people have substantial interest, up to 5% of the capital of the concern is fine. Here capital means that concern must be firm. In such a case, exemption under section 11 will be denied only in relation to the income arising out of such investment. Normal investment that to invest, it will not be just because you invested that money. So this trust invested the money in one concern in which the author's relative only happens to have substantial interest or the author has a substantial interest. The investment will not be stopped or withdrawn, or exemption will not be withdrawn, but if any income is generated from that investment, that obviously will not be allowed to claim as a, this entire exemption as such. Now, the thing is, all that they said you cannot do it. Excess payment for services, excess payment for purchase, inadequate remuneration, right? All these things. Loan without adequate interest, allowing the use of property without adequate rent. These are some of the examples, that's all. Now, what used to happen was, let us say, the income of the trust was 1 crore. Okay. When they were applying, only services to the tune of 3 lakh rupees, was given to a related party, How much did they give that services for? They gave it for 10,000, 20,000. Basically, specified persons were covered. They gave the services at a lesser rate. Will this attract the withdrawal of the exemption? 100% yes. You will not get exemption for the full 1 crore. In that 1 crore, 15 lakhs is removed. You leave. Remaining 85 lakhs. In that 85 lakhs application, you have paid 3 lakhs to somebody. Let's say you have given a loan without adequate consideration. Now, ideally, as per the law, what does it say? That the entire exemption, they have never told such exemption. The entire exemption will be withdrawn. The income or the property of the trust shall be deemed to have been used or applied for the benefits in the following cases. Which case? This one. So, if you have given the money, loan, it means that income or property of the trust is deemed to have been used for the benefit. Which means, even if you give 1 lakh rupees, it is deemed that the full 1 crore is given. And will you get benefit for the full 1 crore? Answer is no. Deadly point. I hope you are understanding. They have never told such part of the income or property of the trust is deemed to have been used. No. They have told that the income or property of the trust is to be deemed to have been used for the benefit of a person. Right. So it is not fair now, guys. 3 lakh rupees I have given, but then you are not giving me the entire benefit of 1 crore. That's why, to ensure that won't happen, there is a proviso that was inserted. Section 13(6). It said, value of such medical or educational facilities provided to specified person either free of cost or concessional rate. Especially this happens in when loan you leave, but it happens in medical or educational facilities. So my example of loan, still full 1 crore is not allowed. But what if it's a medical or educational facility? I have given the author's son, that author's son only studying in that particular school, and they have given him a discount because he is the author of the trust. Fair enough. Educational, medical, they have a hospital, it's a MS Ramaya, and the author of the trust, Mr. Ramaya's lineal descendants or their spouse's lineal ascendant descendant, they have taken some treatment, they have given 40% off. They'll never give that to anybody else. To the tune of 4 lakhs, 5 lakhs, 6 lakhs, whatever it is. Only that portion will be deemed to be the income. So if that 3 lakh example was for medical expenses, only 3 lakh will be deemed to be income, rest it will be allowed as an exemption. Similarly, educational facilities, if I have given 3 lakhs, that will be taken as income, rest will be allowed. Got it? So such trust shall not be denied benefit of exemption under section 11. Very, very simple. So before this, we'll come to R1, then I'll come to R12. See, charitable purpose means what? So basically the previous one, in simple words, provisions of that section 13, all that benefit will not apply to deny the exemption under 11 and 12 if you are giving to specified persons educational or medical services. However, any other services, those services will be deemed to be income, other services will be allowed. So 215, charitable purpose means what? We have discussed this already, guys. Relief for poor, education. See, yoga and this environment and monument, etc. were not there before. It was all deemed to be advancement of any other object of general public utility. In that advancement of any object of general public utility, the rule was 20% of that total receipts. The aggregate receipts from that particular trust, let us say I am doing yoga, assume yoga was not there here. They said, if your income from yoga classes, etc. exceeds 20% of the total receipts, if Baba Ramdev earns 100 crore, if the income from yoga and all is 100 crore, Baba Ramdev earns 1000 crore, if the income from yoga is 100 crore, then it's okay. Income from yoga is 150 crore, then it's okay. But the income from yoga happens to be 500 crore, then it will not be deemed to be charitable purpose, and hence you will have to pay tax under the normal income tax regulations. Obviously, there is a lot of pull, lot of political clout by Baba Ramdev, by Sadhguru, by Sri Sri Ravi Shankar, by Dera Sacha Sauda. So many, such cults are there, and so many such Gurujis are there. Rasaram Bapu, rapist. Dera Sacha Sauda. Ram Rahim Singh Insan is also rapist and murderer. Yes. I'm just giving you. Nityananda, Swamigal, how can we forget? Right? So guys, that's why what they did, the 20% nonsense they removed and they added yoga separately. So guys, in this 20% will not apply to any of these things. That's the most important thing for you to understand. Relief for poor, education, yoga, medical relief. Yoga now you earn whatever income, whatever percentage of the total, I don't care. Only advancement of any other object of general public utility. That's all. Is here, yes. Carrying on commercial activity shall still be regarded as for charitable purpose if such commercial activity is undertaken in the course of advancement of utility and aggregate receipts from such activity during previous year does not exceed 20%. That's why BCCI also I told. It's a trust, it seems, which means all IPL and all, is it 20% of the BCCI's income? No, mint money. Anyway. But since they do it through other cricket boards, it seems dicey. But anyway, Supreme Court has already decided on those things, which I have very much in depth discussed already. Where the gross receipts from commercial activities and 1 to 4, see, I have given already 1 to 5, exceed 20% shall still be regarded as charitable purpose. This is the reason why yoga was separately given here. Similarly, prevention of environment, etc. I know this really well because my dad is a forest officer. He served proudly in the Indian Forest Service for 40 plus years, and he was used as a carom pawn and shifted everywhere. If anybody asks me how many schools I have studied, I can say 17 schools. I have no idea where. Today, if somebody comes and tells, bro, I was your school friend, I'll first question, which college, bro? I don't know. Which school? Right? So there used to be many things called Project Elephant, Project Tiger, etc., where some corrupt people also used to be there and they used to create trusts and loot all the money. So advancement of general public utility, even though it was there, it became commercial activity, etc. So that's why to ensure that they are separately given equal weightage, because it's very important for us to protect our environment in our country. So that's the reason why that is also given separately. Monuments also, you would have seen, we don't even take care of our monuments. So there are, like recently I saw, not recently, few years ago I saw in Hampi, which is a UNESCO World Heritage Site, somebody was pushing the pillar and that pillar fell down also. That was thousands of years ago, old pillar. What nonsense, right? So what happened later? Suddenly, UNESCO World Heritage Site, they caught them and they said, let us now, I mean, obviously they were fined and all that, but they create a trust now, a private trust or a trust, whereby, I mean, a little bit control is also from the government. They will run all this. They will preserve the environment. They will preserve the monuments, places, objects, artists, etc. of historical interest. Yes, that's what they do. BCCI is the other one, advancement of any general public utility. You have seen this. Now 20% for other things, it will not work. So with this background in mind, come to R12. Just before that, we are doing before that. Note number 9 was pending. Page R3. So guys, if the income was 100, 15% is ad hoc deduction, remaining is 85. The trust applies 90. Remaining 5 extra, can it be carried forward was the question. The High Court said yes in Matri Seva. trust. In Matri Seva Trust case law, they said yes, you can do it. Obviously, government did not like it. That year, if you have spent more, why the hell should I allow you to carry it forward? Not allowed. Hence, explanation 5 was inserted. Calculation of income required to be applied for or accumulated during the previous year shall be made without any set off or deduction of any excess application of any of the earlier previous years. That's why explanation 5 was inserted there. Explanation 5 was inserted. And all the corpus donations, etc., only if it is applied that year, it will be, exempt. Otherwise, no. And 2, where will it be applied? Under 11 subsection 5 only. 11 subsection 5. One more question arose. That's why I am doing it now. R12, you come. What is the entire section? Income of charitable trust exempt under 11 and 12 if it is applied for such purposes in India and registered under 12AA, 12AB. As per the definition of charitable purpose, 215, charitable trust includes advancement of general public utility. We know. Charitable trust pursuing advancement of GPU may be a charitable trust in 1 year and not a charitable trust in the other year, depending on the percentages. So this year, if I am less than 20, I am a charitable trust. More than 20, not a charitable trust. Now this year, towards the end, it so happened that it became more than 20%. Commissioner has still not cancelled the charitable. Last year it was less than 20%. He has granted me a certificate. Next year it is more than 20. So he has not cancelled the certificate yet. If he has not cancelled the certificate, some people were taking exemption. And some people were waiting for the cancellation. Is cancellation really needed, or just that the certificate will not be cancelled but exemption will not be given? I repeat, certificate will not be cancelled but exemption will not be given. Let us say last year you were less than 20% charitable trust. This year more than 20%. Are you still a charitable trust but exemption will not be granted, or are you not a charitable trust was the question. To clear that entire confusion, 13 subsection 8 was inserted. If the trust is not a charitable on account of gross commercial receipts, if the trust is not a charitable trust on account of commercial gross assets exceeding 20% of the total gross assets in the relevant previous year, does not lead to cancellation of registration or withdrawal of approval, rescinding the notification issued. So, what did they say? The trust shall not be eligible for exemption benefit under 11-12. 13-8 ensures that the trust does not get this benefit in the year in which the receipts from commercial activity exceeds 20% of total gross receipts, is what this section says. Very, very simple. So let's see. So guys, earlier what people used to do, no, they used to take exemption under section 10 also, then take under 11, 12, 13, that also. They used to get themselves registered in 1023C and 1046. I mean, sorry, 1023C and also section 11, 12, 13. So many things were happening like that. And, some people were taking registration. See, what used to happen was in the previous year, 31/3/20, section 10, exempt is 10 crore. They wanted to claim exemption under 1038, but they were already registered under 11 and 12. So what to do? In order to come under section 10, they used to do violations of this section. For example, they used to buy 10,000 rupees shares of Infosys. The moment you buy 10,000 rupees shares of Infosys, what happens? It's a violation of this section. So they used to withdraw this thing, what do you say, certificate. The moment they withdraw the certificate, then I used to go here and claim all these things. Hence, to curb that from happening. And also, you can only be granted one exemption, and it is 10 subsection 1, that is agricultural income. All other exemption, this also I have written it here, but this has to be removed. This he has written it in the proviso. Though in the main section it is still available, but through a proviso he has nullified the main section 1023C and 1046. You see, when a trust or institution has been granted registration under 12A, 12AB and is claiming exemption under 11, 12, trust shall not be allowed exemption under section 10 except 10(1). 1023C also you were able to claim it before. Now that also has stopped. See this. If the trust is registered under 12A, 12AB, registration under 1023C shall become inoperative. Mind you guys, they never say cancelled. Please don't write the word cancelled. It's just that it becomes dormant status, inoperative. The trust is registered under 1023C, registration under 12AB shall become inoperative. Reverse case. So, because of this proviso inserted in 2020 by Nirmala Aunty, this provision has lost its significance. Simple rule now. If you are registered under 12A, 12AB, whenever I say 12A, you should also write 12A or 12AB because both sections are same now. And you are claiming exemption under 11 and 12, you will not be allowed any other exemption in section 10 except agricultural income 10(1). Except agricultural income of 10(1). That's all. Then if you see, voluntary contribution received by the trust or wholly shall be deemed to be the income derived from the property held under trust for charitable or religious purposes. We have seen this, not to be treated as income. All that we have seen, guys. And it should be used as per 11.5. Procedure for registration. Process of registration is completely electronic. Unique registration number will be given. And before you have started the activities, the amended law also provides for provisional registration. These are all mere theory points. Quickly we'll finish off. Registration at 12AA has perpetual validity, whereas 12AB is registration is valid for 5 years. So whether you go for 12AA or 12AB, registration depending on various factors about your genuineness of activities, etc., you can either be granted at 12AA or 12AB. PCIT, CIT can call for documents or information or make inquiries as he thinks necessary to be satisfied about the genuineness of activities or compliance of requirements. So if you see 12AA versus 12AB, all these things. Existing trust or institution registered under 12A or 12AA on or before 30th/6/2021, because these are all the new act, and they will pass the order within 3 months from the end of the month in which application was received. So if you gave it on 30/6/2021, 3 months, 7, 8, 9, 30th September. Whether PCIT can make any inquiry? No. Period for which registration shall be granted? 5 years. New trust applying for registration at 12AB 1 month prior to the commencement of the previous year relevant to the assessment year for which the registration is sought. 1 month prior to the commencement of the previous year. 31/3/2023, you are seeking for assessment year 23/24. 1 month prior to the commencement of the previous year, 1st April 22. 1st April 22 to 31st March 23. 1 month prior to the commencement of the previous year, relevant to the assessment year for which registration is sought. I am seeking registration for assessment year 23-24. So when should I apply? Before 1 month prior to the commencement of the previous year. 1/4/22. So what is 1 month prior, guys? 28th February 21. Obviously, 1 month prior. Sorry, 28th February 22. 28th February 22. So that is 1 month prior. 1 month from the end of the month in which application was received, that is the time limit for him. Here also no. And what is what period for which registration shall be granted? 3 years from the assessment year from which registration is sought. This is called provisional registration. 3 years from the assessment year from which registration is sought. So technically 3 plus 1 is what you will get. Because when I use the word from, I should exclude the assessment year. Trust which has provisionally registered under 12AB and is seeking for final registration 6 months prior to the expiry of the period of provisional registration or within 6 months of commencement of its activities, whichever is earlier. So provisional registration will be 3 years that they are given now, 6 months before it ending, or if they have already started off the activities, whichever is earlier, 6 months prior to that, you have to seek for final registration. You can't just go, tomorrow is expiring, you cannot go there today. It should be done before only. Same here also, 6 months from the end of the month in which the application was received. And here in this case, period for which registration shall be granted, guys, 5 years from the assessment year in which provisional registration was granted. Plus registered under section 12AB, where the period of registration is due to expire. In the previous case, it's already there, 5 years you are registered, it's due to expire. Then 6 months prior to the expiry. And within 6 months of whenever you have received it, they have to give. Again for 5 years, they can extend. Plus whose registration has become inoperative due to approval under section 11.7. Right? You are playing around, going there. We explained, no, 11.7 before this one. You have shifted to 10.23C. That's why this has become inoperative. Then what to do? 6 months prior to the commencement of the assessment year from which registration is sought to be made operative. Prior to the commencement of the assessment year, 23-24, 6 months before, 30th September it will come. 6 months from the end of the month in which, so this you have to remember, guys, unfortunately. So just go through that couple of times, you will know. Plus which adopted modifications of the objects. Objects clause had some problem and they have sought for modification. In those cases, if it is not conforming to the conditions, 30 days from the date of adoption of modification, you can seek further registration. And within that, from that day, within 6 months, they will grant the approval. And here I can ask for all the documents. In these previous 3 cases, 4 cases, you can ask for all the documents. So study this chart and go, it will be easy. Check it out. Trust created on 10/6 avail exemption from assessment year 23-24. Trust can avail exemption from 24-25 onwards by making an application 28/2/2023. That is 1 month prior to the commencement of the previous year, that is 31/3/24, relevant to the assessment year for which registration is sought. The trust is not mandated, so this is important. Follow these examples, guys, important. The trust can avail exemption from assessment year 24-25 onwards by making application by 28/2/2023. That is 1 month prior to the commencement of the previous year, that is 31/3/24, relevant to the assessment year for which registration is sought. The trust is not mandated to commence its activities or prove anything to the PCIT or CIT. Whatever example I gave you, people were following this. Now you know why it is wrong. That's why this was a CBDT clarification. That's why I'm telling it's important. This example I have copy pasted from there. So you follow this. Provisionally, they will register the trust by passing an order by 31/3/23. There's 1 month from the end of the month in which the application was received. This was the end of the month. 1 month is 31/3/23. In order to make registration final, trust is required to file application for final registration at least 6 months prior to the expiry of the period of provisional registration, 39/25, or within 6 months from commencement of activities, whichever is earlier. If the trust has commenced its activities on 1/1/2025, 3925 or 1125, whichever is earlier. So what is it? Whichever is earlier? 1125. So here, sorry, 3925 or commencement of activities, 6 months from the commencement of activities. If the trust has commenced its activities on 1125, 6 months before, application for registration should happen 3625 or 3925. 6 months from the commencement of activity. So 3625 or 3925, whichever is earlier. So this is earlier. He has to pass an order within 6 months, that is by 31/12/25, granting the registration. The trust has commenced its activities on 1126. So that's what? 3626 or 3925, whichever is earlier. So that is 3925. Same. So follow this, guys. Becomes very, very simple. Very easy. It is trust. These are all theory stuff. That's why I'm going fast. No point going slow and wasting your time. Where a trust or an institution has been granted registration under 12AB and subsequently commissioner is satisfied that there is occurrence of one or more specified violations. He has received a reference from the AO and a second proviso of 143.3 for any previous year. Notice scrutiny. Such a case has been selected in accordance with the risk management strategy formulated by the CBDT for any previous year. The commissioner can call for documents or information or make inquiry by an order in writing, and after giving an opportunity of being heard to the trust, cancel the registration for the previous year and all subsequent previous years if it is satisfied that specified violation has occurred. Cancel the registration. Pass an order in writing refusing to cancel the registration if he is not satisfied about the occurrence of one or more specified violation. The order shall be passed within 6 months from the end of the quarter in which the notice is issued or on or after 1/4/22 calling for information. 6 months from the end of the quarter in which the notice was issued by the commissioner on or after 1/4/22 calling for information or making the inquiry. Excuse me. Right? 6 months from the end of the quarter in which the first notice was issued by the commissioner on or after 1/4/22. He called for the information on 1st May 22. What is the end of the quarter? April, May, June, 30th June. From there, 6 months. That is 31st December. Like that you should see. What do you mean by specified violation? First, if it has not applied, income has not been applied for the objects of the trust. Obviously, directly it will become specified violation. Where income from business is not incidental to the attainment of the objectives of the trust. Second one. Where separate books of accounts are not maintained by such trust in respect of business, which is incidental to attainment of main objects. So as we have told, even though you have other objects, that separate books of accounts have to be maintained. Otherwise, it is a problem. What? It will become a violation. And the trust has applied any part of its income for private religious purposes, or that the trust has applied any part of its income for the benefit of any particular religious community or caste. Not allowed. I mean, you can do it, but you will not get any exemption. Where any activity carried out by the trust is not genuine or carried out in accordance with the conditions subject to which it was registered, where the trust has not complied with any requirement of law. What will happen? Trust should be registered under 12AB basically, where total income of the trust without giving effect to 11 and 12 exceeds the basic exemption limit. Books of accounts and other documents have to be kept and maintained in the prescribed form, and also accounts have to be audited. So guys, the basic exemption limit is 2,50,000. If your total income exceeds that before giving any exemption, then obviously you have to maintain books also, and you have to get the books audited as well. The trust should furnish the return of income under section 139(4)(a) within the due date. We had seen this. Notes. Exemption under section 11 and 12 shall be available as follows. Instances under 12AB. Instance 1. For assessment year for which the trust was granted registration earlier. From the, so basically if it was granted earlier, from that year only you will get the letter today, but the granting date was earlier. So from that day only you will get. From the assessment year relevant to the previous year in which the application is made. From the first assessment year, basically they are talking about 12 AB, this one. These instances, 6 instances. So from here, from which year you will get, that's what they are trying to tell. You will get it from assessment year in which the trust was granted registration letter. Second one, from the assessment year relevant to the previous year in which the application is made. Second one. New trust applying for registration. Third one, provisionally registered already and now applying for fresh, proper registration. From the assessment year, first assessment year in which it was provisionally registered. From that year only you will get like that. Exemption under 11 and 12 shall also apply for any assessment year preceding the assessment year for which assessment proceedings are pending before the assessing officer as on the date of registration and objects remain the same. So even though assessment proceedings are pending before the AO, still you will get exemption, no problem. No action under section 147 shall be taken by AO for non-registration of trust. You cannot say income escaping assessment just because you have not registered for any preceding assessment year preceding the aforesaid assessment year. Notes 2 and 3, this one shall not be applicable in case of a trust which has refused registration or where registration was cancelled at any time. So guys, pending registration, all these you can do, but it was refused registration because it was doing some terrorist activities, for example, or it was cancelled at the last time under 12A, 12AB, 12A, 12AB. So obviously, can you go ahead with it now? No. Trust was formed on 1/1/2007 and did not apply for registration at 12A, applied for registration at 12AB. That is for not for perpetuity but for 5 years on 28/2/2023 and registration was granted on 31/3/23. Provisions of 11 and 2 will apply to which one? Previous year 23/24 only. That is assessment year 24/25 for 5 years. The trust claimed exemption 11 and 12 in the return of income for assessment year 17/18 to 23/24 and the objects and activities for the trust are the same and have not changed. On 31/3/2023, the date of registration, many things happened. What happened? Case of assessment year 22/23 is pending before the AO. No problem. Shall allow the exemption under 11 and 12 for assessment year 22/23 since objects and activities are the same. So that is important to see. Objects and activities of the trust must be same. Cases of 19, 20 and 2021 have been completed by AO under 143.3, disallowing exemption under 11 and 12 and assessment orders were passed. Appeal is pending. Guys, appeal if it is pending, nothing can be done, but the assessment procedure is over. Hence, no relief to the assessee for assessment year 19, 20 and 2021 as the cases are not pending at all in the assessment. It should be pending in the assessment. If you have preferred an appeal, that's not called pending. You have preferred an appeal against the order. So that assessment should have been over already. Case of assessment year 2021 has been reopened under 147 for disallowing exemption under 11 and 12. The case is pending. So AO will drop the proceeding under 147 for assessment year 2021 if the case was reopened under 147 only on the grounds of non-registration. If it is not non-registration, if they say they are using it as a front, that trust, but behind they are doing other nefarious activities, dangerous activities, then nothing can be done. This is just for non-registration. Can I drop proceedings? Yes, I can drop proceedings under 147. AO wants to reopen cases of assessment year 18-19 and 19-20 on 10/4/2023 under section 147. Yes. AO can issue if it is other case, but he will not issue notice only on grounds of non-registration of trust. So this will cover almost all the cases, guys. It becomes very easy. All that we have done already, anonymous donations, etc. BBI, etc. will do. Come to this, page R13. Exemption for income arising to, this is exemption under 1023C. You can register under 12A, 12AB or you can register under 1023C. If you register under 1023C, you follow this chart, more than sufficient. Educational institutions or universities existing solely for educational purposes and not for the purpose of profit. Hospitals or medical institution existing solely for philanthropic. Phil means love, anthropos means mankind, human being. So charitable purpose. and not for the purpose of profit. Other fund, institution, trust, university, education institution, or hospital for charitable purposes, other things. If it's an educational institution or university existing solely for educational purposes and not for purpose of profit, wholly or substantially financed by the government, 1023 3AB. If it is financed by the entire government, guys, no approval is required. Section 11 is also not applicable. It's a government run trust. What you will give exemption, what you will apply, nothing needed. Aggregate annual receipts do not exceed 5 crore. If the aggregate receipts do not exceed 5 crore, no approval or registration, section 11 also will not apply. Which means, when will it apply section 11? Only if it exceeds 5 crore. This is for which one? Educational institution. Hospital or medical institutions, wholly or substantially financed by government, again no approval required. Aggregate annual receipt do not exceed 5 crore, again no approval registration required. But this approval and registration applicable, same as 11, 12, 13, VBC, same thing. This we have seen already. It will apply. Obviously, it will apply. Registration procedure also is the same. Scenario 1 to 4, same thing. So, if an institution is engaged in imparting education, somehow makes profit also, would it mean that it is ceasing to be a, what do you say, charitable organization? No, there are many such cases. Supreme Court case also told that it is not the case. Like that. The trust engaged in execution contracts awarded by Indian Railway for cleaning train coaches and railway stations for which it engaged poor people. It was held that the trust was not engaged in charitable purpose as the activities were commercial in nature. So they hired poor people, they cleaned, they got the money, they gave some peanuts to these poor people. No, it was not for any charitable purpose. Where seminary trainings were given to the student priest. So for the priest to give their, what do you say, seminars, that is called seminary trainings. Priests will give a lot of, talks, etc. That is called seminary training. They are given to make student priests who head churches as religious leaders practicing and propagating religion as a profession is an educational process. An institution shall be eligible for deduction under 1023 CS. It's an educational process. In the first class only I told you, if you are a priest, it will become like a profession. It's not necessary for an education institution to be established in India. However, education activity must be carried on in India. This is Oxford University Press, long back case law. Sabarmati Ashram Goshala Trust also, where the main object of the trust was to breed cattle and to improve their quality to promote agriculture, objects would fall under section 215. Merely because certain incidental surplus was generated would not render the activity commercial in nature. Exemption granted. Mere promotion of entertainment events by sport activities will not be covered under 215. So, promotion of activities, sports activities, etc. You cannot run a trust and say, I'm only promoting sports activities. 215, no. Promotion, no. Do you organize sports? Do you have a separate training center where I can deem it to be an education for the, sports person? All that you have to consider. 85% income which is accumulated, I told you, Bagri Foundation already discussed. 85% income which is accumulated cannot be donated to another charitable trust. However, 15% you can do whatever you want with it. It's an ad hoc exemption. This I told you, Queen's Education Society. Just now I told you, I didn't tell you the case law. First case is what I discussed. Where an educational institution engaged in imparting education incidentally makes profit, does not mean that the institution ceases to exist for educational purpose. Distinction is to be drawn between making of surplus and activities being carried out. So just because you are carrying on those little extra activities making money doesn't make you lose the concept of charitable organization. So other small things are there which I think we can see it in the next class about all these things. We can finish it off. So one more session, and along with that ATG also will connect and finish. One more session of some half an hour, 40 minutes, maximum 1 hour. Trusts are over, guys. Then we will see what to be done. Okay, see you.